Tough, right? So is it a good idea to be using your plastic? I'm not. Maybe a little. An op-ed piece in Tuesday's Wall Street Journal, Meredith Whitney, CEO of the Meredith Whitney Advisory Group, wrote, quote, if credit is taken away from what otherwise is an able borrower, that borrower's financial position weakens considerably. With 2/3 of the U.S. economy dependent upon consumer spending, we should tread carefully and act collectively. In essence saying, don't take away consumers' ability to charge, hence get into more debt. Our next guest, who predicted this impending crisis, disagrees. Joining us now, Peter-Schiff, president of Euro-Pacific Capital, who almost a year ago to the day, March 19th, when Visa went public, you said what here on Fox Business?
Well, I know I've been talking for a long time that one of the next major crises was going to be the implosion in the credit card market, and particularly the asset-backed market, because Wall Street had securitized credit card debt in the same way it did mortgage debt.
The same way that it sliced and diced and resold the subprime mortgages that got us into huge problems today.
Exactly. And one of the reasons that so many people were getting all these offers for credit cards, and it was so easy to qualify, was because Wall Street had an outlet for all this debt. There was an appetite for it all around the world. And so Americans were able to borrow unprecedented amounts of money that under normal circumstances they never would have had access to that credit.
Okay, so Meredith Whitney, who, by the way, we asked her many times to come on, and she has said no continuously. She basically is saying, though, if you cut off credit cards from people who could actually pay them back, you're going to hurt the economy even more. You don't agree?
No, in the long run, that's going to help the economy. What we need is fewer people to use their credit cards. Meredith makes the point that a lot of these American citizens use their credit cards as their what-if money. Like, what if my dog gets sick? Or what if my roof leaks? Or what if I lose my job? Well, the what-if money is supposed to be savings.
Cash.
You're supposed to save for a rainy day. Not say if it rains, I'm going to whip out my credit card. We need people building up their savings because this society of ours needs savings. We're not going to grow unless there's a store of savings so entrepreneurs can borrow it and invest in capital. So we don't want people to rely on their ability to go into debt. We want them saving. If that means they spend less money in the short run and our economy has a deeper recession now, so be it.
But what if, Peter, I can always pay it back? I mean, we talked, I think it was about a year ago, where Amex, out of the blue, cut your ability, cut your limit, didn't they?
Right, but remember, I was paying off my credit bills on my company every month. I wasn't financing it. Right. This was, you know, I was paying it in full every month. But, you know, just because you can pay it back doesn't mean you should borrow it. And in fact, what Americans need to do is save their money so that when they want to buy something, they don't need a credit card. And if their dog gets sick, they have the money to pay for it. We have to get back to that. We can't just keep relying on going into debt. Because the problem is, when you lose your job and you need money, who's going to want to lend it to you? The idea is that you have a savings, and the reason that we didn't have such a deep recession, let's say, in the past, is because when people lost their jobs, they did have something to fall back on. Now they've got nothing to fall back on but the ability to go deeper into debt.
Which is not a good thing. 2007, October, you were here. You predicted the Dow would go below 10,000. You, a year ago, predicted this credit card debt really imploding. What are you predicting now?
Well, look, I still see a lot of problems for the economy. I don't think the Dow has finished falling. Despite the recent rally, I think the bear market is going to live for years to come, and we haven't seen the lows. Even if we have a substantial rally in the short run, we're not through it. But the big major crisis has yet to hit us. We've thus far been spared the real bulk of the crisis because foreigners are still propping up the value of our currency and putting their savings into our bond market. Ultimately, that's going to come to an end. And that could happen this year. Maybe we'll make it to next year. I don't know. But when the foreigners pull the rug out from under our economy, when they stop buying our bonds and stop buying our currency, then this thing is going to become a real crisis.
We've got 20 seconds. Where are you putting your clients' money right now?
Look, I'm putting it exactly where I've been putting it. I'm still buying gold and silver, which have been doing well recently. I'm still taking advantage of cheap stocks overseas. I'm putting a lot of money into Asia, particularly the companies that have a lot of exposure to China. And I'm just doing whatever I can to get out of this developing crisis because we're still in the early stages.
Peter-Schiff of Euro-Pacific Capital, good to see you once again.
Thanks for having me.